Hello and welcome back to the Growth Circle podcast. I'm your host, Lincoln Amstutz, and today we've got Ben Reinberg on the podcast here joining us. A little bit about Ben before I bring him on. Ben has started building his commercial real estate empire at 24 years old with nothing but shoe leather and a lot of hustle. Today he owns over $500 million in assets across the country and shares his wealth building, commercial real estate investing, self-improvement, and leadership insights with his audience around the world. Ben is a true expert in the commercial real estate industry and through his large online presence has helped thousands to start and grow their investing careers. So with the excitement, I bring Ben on the podcast. Ben, thanks for joining. Absolutely. Well, I know you found massive success growing your real estate portfolio as well as gathering a following of over 100,000 online. I'm 24 years old myself, and I know we've got a lot of younger entrepreneurs listening, people getting started. My question to you is, when you got started into real estate investing, did you have this goal and vision of where you're at today when you got started, or was it more so putting your head down, working hard, and this is where you've ended up?
The latter, putting my head down and working hard. I mean, I had goals that I wanted to have my own business, Lincoln, but at the end of the day, I had no idea where this was going to take me. I mean, when I got out of Indiana University, where I went to school, I didn't know what I was going to do. I was an accountant. I'm a CPA, so I got a job there and then just developed and got into commercial real estate, and here I am today. So I didn't envision where I would be. I just kind of put my head down, worked every day, showed up, had a consistent just ability to show up to work and grind. And I would work weekends. I would do whatever it took to get to where I wanted in life. And so it was just a lot of hard work and hustle and showing up and being consistent. And that's really what the key was.
Mm-hmm. Absolutely. And for those listening that may not be as familiar with your background, could you just give a rundown of where you're from, how you got started in choosing real estate investing, and kind of your professional experience to date?
So I am from Chicago, born and raised, proud Chicagoan. Grew up in the suburbs, the north suburbs of Chicago, and then went to Indiana University, graduated in accounting, and then got into business, the business world, and started Alliance at a young age and wanted to build wealth. And I realized, being from Chicago, that's where a lot of significant icons and billionaires were from. And I said, well, that's the industry I want to be in, because it's already been proven that there's a tremendous amount of billionaires and wealthy people in owning real estate, especially commercial real estate. So I got started, built a lot of properties, did a lot of syndications, raised a lot of money, and just believed in myself. And I do today. I mean, every day is a challenge. There's always something that comes up in this industry in commercial real estate you got to deal with. I mean, last night I'll get an email and there's a challenge and something I got to tackle. I got to bring someone in from my leadership team and say, hey, this is how you should deal with it. So there's always something, and it's just, for everyone out there listening, is commercial real estate is a marathon business. It's not like, being from Chicago, and I have investors that trade on the Board of Trade or the Mercantile Exchange back in the day. A lot of them are retired, but they were making money hand over fist at all different ages, and money was flowing quickly, the velocity of money. And in commercial real estate, the velocity of money is a little bit slower. You have to be more patient. We have deals that, we have leases that have taken a year to negotiate. We had sales transactions that get extended in due diligence, where maybe it's a 60-day process becomes a 120-day process. And so you really have to be patient, you have to be persistent, and you have to be consistent. Those are some of the keys to being successful in commercial real estate, Lincoln.
Yeah, that's good. When you first started buying properties, Was it immediately commercial real estate? Was it residential? And did you take those down by yourself, or were you with partners right off the bat to buy these assets?
Well, I had to raise equity to buy these assets. I didn't come from money or have money. So I went out and hustled, and that's how I raised money. So for me, it was, go out there and get it done. I didn't jump into the residential game. I didn't really understand the residential game. I was more of understanding numbers. Commercial real estate to me was a lot easier to understand than doing sales comps and comparing how many bathrooms I have and finishes and Chicago. I wasn't really enamored with the residential market, and so when I started Lincoln, it was a local business, became a regional business. And then obviously nationwide, and now it's international. And so with the internet, that's helped tremendously with the flow of communication. And so for me, to answer your question, it's always been commercial. Now, I've owned residential homes and do to date, but that's where my domicile lives. I don't, get involved in fixing and flipping and buying this and buying that and rehabs. And I understand it. I understand what people do. I know there's a large younger audience that gets involved in it because it's a little bit easier, lower barriers to entry. I think what I do for a living is a little bit higher barriers to entry to be able to raise the kind of money we do, understand the nuances. And so it's a little bit more cumbersome, and I realize that. But at a young age, I just jumped in. I really did. I just jumped in and started doing it.
What resources early on did you use to educate yourself about commercial real estate and even maybe discipline and growth and to be continually improving yourself? What kind of resources did you use to help with that, outside of just, of course, showing up and doing the work?
For me, it was doing enough deals. Every deal I learned something, but also the resources around you. The brokers in commercial real estate teach you a lot. You get a lot of information. You call appraisers, insurance agents, attorneys. You look at your sphere of influence in commercial real estate between accountants, attorneys, insurance agents. It could be brokers. I mean, you name it. It's just asking questions, being a good listener, and hustling. And that's how I learned. It was different. These days, I couldn't even imagine getting started. I got the internet. I got ChatGPT. I got all these resources. For me, it would have been a lot easier. I didn't have these resources. So for me, I had to take the approach of asking people, being vulnerable, showing people I didn't know what I didn't know, and listen and take notes, and became a big notepad taker. And everywhere I went, I had a piece of paper or a notepad with a pen, and I'd ask questions. I'd write down, I'd learn. I'd implement it into deals. And after doing enough deals, you get higher on the learning curve, and that's what creates success.
Right. I know that utilizing your network, however big or small that might be, is huge because you have that conversation. You can learn something from anybody, and they can connect you with others, and then you just take that little bit that you've learned and take that next step. So for you on the commercial side, did you pretty quickly do these syndications and find yourself connected with a lot of investors who wanted to give you money because you were finding good deals? Or was it you 100% equity in properties for a while before you started just taking maybe a minority share, but to be able to take down larger properties?
Well, my first deal, I had a great yield to pay investors, and I gave away most of the store when I was younger, so to speak. I gave a significant portion of the equity in the deal, so it was really attractive. And so my first deal, I gave a great return, a preferred return up front, great equity split, and went out there and hustled and found a great deal. And the deal sold itself along with, learning how to pitch. And at the end of the day, I was able to raise millions of dollars and went on and had success for that first deal, and that catapulted me to do even more.
Where did you get connected to people that had the resources and the means to invest in real estate like this? Because I know for a lot of people, they just don't have those relationships at this point. Obviously, there's meetups and things to go to, people that are buying. But for you, how did you find those people and I guess get them to trust you to be kind of the leader on bringing this deal and putting it all together?
Well, I was in a large city. I'm in one of the largest cities in the United States, in Chicago. And there is a tremendous amount of high net worth credit investors in Chicago. So for me, I worked out. Fitness was a big place because I went and joined a place and it was expensive for me at the time, but I knew I would meet investors there. So what ended up happening, I meet my accountant. My accountant starts introducing me to people. I network from there and I introduce people and I learned how to network. I was outstanding at networking at a young age. I learned because what I did is I took an approach of how I could help people, who I could connect them with. And then in turn, they would help me. Ben, what do you need? How can I help you? Well, I need investors. I need equity. Here, I got this great deal. Take a look at it. Long story short, it's just networking. And so I just put myself in areas. People say put yourself in rooms that are smarter than you. And that's what I did. I put myself in an environment where there was highly successful people around me that over time, as I got to know them, they started trusting me. And long story short, I'd pull one in twice and I would perform. And that's how I did it. And it's a lot of work and it's hard work. And it's not easy. That's why I said there's a high barriers to entry to get into our business because a lot of people give up, Lincoln. I mean, there's more people I see in and out of our business that get just swept away in a bad environment. They just say, I'm not going to hang in. I can't do it. It's too long of a business. Velocity of money might not turn as fast as I want.
Did you have income coming in from another source or a different part of real estate at that time? Or was it you were just building up these assets and banking on some cash flow or whatnot to get you through to find the next one?
My wife was a school teacher, and we were living off her salary. And God bless Jamie. I mean, she's been a staple in my career. And we're living off her salary, which was like nothing if you would really see how we were living. Yeah. And it was a challenge. And what I did is every day I said, honey, don't worry about it. We're going to make this work. And I did. And I just 24/7 raising money, looking at deals, managing deals, had the energy when I was younger. And then I sit here today and this is where we're at. And so she believed in me. And that was a big reason behind the success, is having that partner that said, go ahead and do what you got to do. And she was great. And so she worked hard. This was pre 3 kids, and we were able to make it work. And but yeah, there was some tough times. I mean, there was some tightening your belt. There was some eating. Now you guys call it ramen. We were eating pasta. We were. And the fact that I eventually could afford to belong to a really nice fitness place, which was like a tennis club fitness place, was like a huge deal for me, because no one gave me money. No one just said, hey, here, go ahead and start a business. I wasn't a trust fund baby. I wasn't, lucky sperm, as they say. I was just a guy that was in Chicago, that was well educated, that said, okay, here's what I'm going to do, and I'm going to hustle and do everything possible to make it happen. And that young man in me still burns bright in me. Like every day I show up to work, I get in at a certain time. I train in the morning. I work out. I work late. I do a lot of writing. I write a blog for hundreds of thousands of people every week. We have our podcast, Ben Reinberg, I own it. My personal brand's growing. I just launched it a year and a quarter ago. And so now, between my podcast and everything else, it's really been just fantastic. And so it allows me to meet great people and network more. And I'm getting more and more involved in this digital world. And it's a unique experience for me. I was I was on LinkedIn, but I was shying away, Lincoln, from the social media experience. I'm like, I don't need anyone knowing what my success and what I've done. I just want to be. And my staff said, no, you really need to build the personal brand. It will help the company, the leadership team. and it will help our growth and get our name out there. And guess what? More investors come in, more opportunities, and that shines bright. I mean, even from the marketing we're doing, the stuff I'm doing, whether being on your podcast to whatever, people are saying, well, how do I get into the brand new Alliance Medical Property Fund? How do I invest with Alliance? Because they have 200 plus years of leadership team experience. And Ben's been doing this for almost 3 decades. And we want to leverage into his talents because I'm a passive investor. I don't want to deal with the headaches that him and his staff and his property and fund administration and accounting departments all deal with on a daily basis. I just want to reap the rewards like he does, but I don't want to do anything. Well, that's what we offer to the public, and it's a beautiful thing. And so the digital world has really helped us promote how we can benefit and help people and serve people. So it's exciting times.
Yeah, that's huge. And I think that's big for people, young or older, whoever, getting into real estate more and more. Is you've got to realize that this industry at large, there's a lot of time that it takes before you start to see and reap the rewards that are there on the other side. And it sounds like even more so with commercial, because that barrier to entry is even going to be a little bit higher in getting into those initial deals and then finding the right ones, the right people to work with. At this point, as you're saying, you've got connections all across the country, and I'm sure solid deals are getting sent to you, from all over. How do you choose the projects that you want to be a part of and that you want Alliance to invest in?
Well, we have specific criteria. I mean, over the years, take the Alliance Medical Property Fund. So for decades, we've analyzed and understood and researched what makes a great medical property to invest in, what area, what niches, what are the different nuances within the medical space, to take an example. So same thing with industrial and office and retail. Those are the food groups that I play in. I understand everything else, multifamily and self-storage and hotels, I get it. But my focus is office, industrial, retail, and now we've chunked down 19 years ago and said we want to heavily invest in medical and veterinary and office, and so that's what we do. So what ends up happening is you go on the learning curve and you bring in resources and knowledge and you do enough deals, and long story short, your acquisition criteria starts molding into what creates success. And so it's taken years to develop our criteria, and it's allowed us to have this secret sauce and formula that works for us, where we invest, to how we invest, to type of niches we look for, the niches we don't invest in. And what that does is it creates great returns. I mean, if you look at our track record, we're mid-20s IRR just on medical. And medical is a safe, secure, and conservative type investment vehicle. And the fact that we're generating those type of returns really speaks volumes to, our criteria and how we analyze a deal. And, we might go months without buying deals. And we do that on purpose because we don't like a market, or we think the gap between the bid and the ask, like what's going on right now, is very significant. And so the cost of capital out there in commercial real estate is really expensive right now. We're seeing face rates in the 7s now. We've seen 8s. And so you look at the loan constant. And if everyone doesn't know what a loan constant is, just your principal and interest, your debt service divided by your basically your loan, and that's going to show you what percentage you're going to pay on that. And so for us, we're looking at it, we're like, okay, well, if our loan constants are 9s and 10s right now, what type of cap rates do we need to buy it if we put leverage on it? Are we paying all cash? What's the benefit? Are rates going to drop? What's going to happen with the election going on in 2024? There's a lot going on in our country next year. It's going to be a wild ride. We have $1.4 trillion of loans and commercial mortgages coming due in the next 18 months. We have a presidential election. We have inflation going on. We have rising interest rates that are probably going to tick up a little bit more at the end of this year. And we have some wars going on around the world. And so for us, you look at this and we're closely and we're saying, okay, when are we pulling the trigger and buying deals? When is that going to happen? And so it's interesting times right now, and I suggest everyone keep your powder dry. There's going to be a lot of opportunities, I think, next year coming about.
And I think that's the right attitude, is not to be in a fearful mindset with all of this, uncertainty and the things going on right now in America and around the world. Obviously, you've got to be conscious of that and mindful. But for you, how much do you adjust your strategy or even change your criteria based off of the market and the way it is versus just holding out and maybe not buying anything for a while until what you're looking for comes available?
Well, we do both. I mean, we'll look at it and say, okay, if we are putting leverage on it, is there a creative way to do it? Is there more seller financing going on in this market? What there is, how are we buying deals? What's the barriers to entry? How does it meet our criteria? And so the market will kind of dictate the volume. And so we see a lot of properties are just overpriced right now. It's just the nature of the beast. I mean, people feel that they're going to get 1031 exchange money, and there's not a lot of 1031 exchange money out there. So what ends up happening is they are sitting, these brokers, and they're promising their sellers that they can get X, and the market's telling them Y, and they're sitting and sitting and sitting. And so we track those deals and we look at them. Eventually, they become opportunities. So for all you sellers out there, if you want a real buyer, pick up the phone and call Alliance. If you want a realistic view of what values look like, I think one of the biggest issues I see in the market is I see a lot of brokers that are buying listings and their sellers are sitting and sitting. And so what ends up happening is it irritates the seller and they start switching and start, well, this guy promised me I could sell it for a 6.3 cap in this market. Well, it's going to be a challenge because maybe a trade buyer won't even pay that because they're going to put leverage on it. They're like, well, why am I going to do that? I'd rather get a different type of return that's out there. And so we're going to start seeing that turn shortly. And I feel that there's a real gap right now going in the market. And so you have to be patient. And so for us, because we've been through different cycles and we've seen this movie before, we're saying just be patient. I tell my acquisition staff, Link, I said, everyone just be patient. Look at enough deals. We'll find our deal flow, but you have to be patient. You have to take a step back and say to yourself, we're in this for the long haul. It's a marathon business. Don't make dumb decisions by overpaying something or because we don't over leverage properties. But that day we see values dropping, because even refinance, we've seen on refinancing where we've had face rates of 4.5%, and you go in and all of a sudden we're in the sevens on a refinance. Well, that's a 250 basis point spread. That's a big deal in cash flow. So all of a sudden our returns get hit. And so this is what's going on in the market. And it's just struggle. And guess what? It washes away a lot of the weakness. So you see a lot of brokers come and go in this times because they can't make it because they're not pricing deals right. They're sitting. They're spending time. They're spinning their wheels on deals that just aren't valued properly. And so if people would understand the real estate fundamentals in our business and really focus on them and really look at values in an accurate, feasible way, deals would get done and people would make money. But they don't want to do that. They want to promise them the sun and the moon, and then they end up sitting. And then we come in and, we're the heroes because we're giving you a realistic viewpoint, and that realistic viewpoint is certainty. And so that's what my company, Alliance, we're synonymous with the word certainty. We know how to close. We never put a deal under contract. We don't link in. And at the end of the day, that's what sellers want is certainty. And so that's what we offer.
Yeah. That's huge. And that's something I've been having to learn on my end and even seeing locally, because it is an interesting time in that there are still a lot less listings, a lot less properties for sale in our local market here in the Midwest. And so I can almost see, some of these investors getting antsy, just wanting to still do deals. So they're taking down these deals that are they're overpriced, right? The numbers really don't work, but they're taking them down just to take them down rather than doing what you're saying and being patient, waiting for the right opportunity, still having your criteria, and knowing that those opportunities will come along. What is the communication like for maybe your investors? At this point, you got a lot of people giving you money that want to invest. What's the communication process like there for, hey, I thought we were going to be buying X amount of properties, or, where's my money? How's it working right now? What is that like talking to those investors?
Well, we do significant amount of communication, whether it's quarterly narratives on the properties we have with them. We do fund narratives, which are phenomenal. We over communicate with our investors. That's the key. And by doing so, I do webinars. And so I'll do a webinar. We did a webinar recently, and it was a huge hit. And we're doing them every month now because people want them. And we invite investors that invest with us, new investors, and people love it because the last webinar I did was a State of the Union. It was the ability. Seems like we got a little echo going on here. It was the ability to explain to them the gap between the bid and the ask of why we're not buying deals for the fund right now. Like what we just don't buy deals to buy deals to generate fees. We're buying deals to create wealth for our investors. That's the number one goal. And when you offer that 7-star experience, that white glove service, you got to live up to your words. Your words have to mean things. You have to be honest with yourself and be honest with people. And so over communicating, I love telling people the good and the bad because that's how it is. What you see is what you get. You invest in Alliance, we're going to tell you when things are good, when things are bad, in between, you name it, because that's the way it works. And that's how you build a career being in this business for almost 3 decades like I've been. And so you might not love what I'm going to tell you, but I'm going to tell you because that's my role as a fiduciary. Not everything is rosy in our deals, Lincoln. They're not. And if anyone tells you that, they haven't been in the business long enough because nothing's perfect. You're going to fail a few times and try to minimize those failures. And I always say if I go 8 for 10 batting average, because I'm a baseball fan being in Chicago, if I go 8 for 10 in my career, my God, what an incredible track record that is. Okay, so maybe 2 out of those 10 weren't profitable or lost or broke even or whatever. Okay, that's fine. But if you invest with me over a long haul and I make you millions of dollars, I'm doing my job. And communication is important because a lot of our investors might not know all the nuances and details going on. They don't see like what happens. They don't understand like why are we not buying deals? Well, we're not buying deals because cost of capital is expensive and the sellers are asking a lot of money, and we're not going to lose our ass. We're not going to lose your money. We care about you. You come first, Mr. Investor. It will always be the case. And I have a saying, and this is something you could learn about as a young man in the business, is every penny you take in, you have to value how hard that person, that man or woman worked in the business that they were in to be able to give you their disposable income to invest in. That's a privilege. And when you honor that privilege, Lincoln, everything else takes care of itself. Your decisions, your communication, how you communicate, how hard you work, showing up maybe on a weekend, working at a night, whatever it is, traveling across the country to see properties, being a good fiduciary. See, the thing is, my investors don't see the work that me and my staff do, and they don't need to. All they care about is results. But what generates results is that consistency, that persistency, that hard work that I was talking about. And it's the little things you do when no one's looking. You know, I'll be here on the West Coast in Newport Beach in my office on a Saturday, okay? And God forbid anyone should work on a Friday or Saturday in Southern California, I hear, but Ben Reinberg does. So I'll walk into my parking garage, and the security people are waving to me, saying hi to me. And they know me on a personal basis because they know I'm here to grind. And so I go to my office, and it's quiet, and, you know, we could be shooting videos, or I'm working or looking at deals or writing letters or, you know, looking at weekly reports from my team, you name it. And it's those little things that go a long way for your investors. It's the little things you do that no one's looking, that you know internally what you're doing to help generate wealth, stability, and security for your investors. And if your mindset's that way, you can have a long career. I think where people go wrong is they take things for granted. They're not grateful for being able to manage other people's money, have them invest with you. And you have to instill that in your employees and your leadership team, because they have to have this buck stops here mentality of, oh my God, someone just committed $1 million to our fund. Well, that's a big deal. That's a lot of money. That person worked their butt off to be able to invest with us. And who knows? I mean, you're in the Midwest. We're both Midwest guys, right? And so think about this. Think about those cold days where the wind is howling and there's snow and ice, and you got to commute to work, and you're in the city of Chicago. Maybe you take the train, wherever you're from. Well, what are those moments you go through? What are those mind moments you go through? What is it where, your significant other or spouse is nagging at you, or you got issues, or you have kids, or you're struggling, or whatever is going on, and you got health issues in your family? So we're all human, and if you don't value the struggles and challenges that every single person goes through and every penny that they invest, I tell my employees we shouldn't be doing this anymore if we're not grateful or value every penny. That's a big mindset. When you have that mindset and that culture in your company, guess what? It creates great success. It creates that 7-star experience for investors, and they grow and they learn. And again, to go back to your point, communication is everything. And if an investor doesn't like what you have to tell them, that's okay. That's their lens. But at the end of the day, Lincoln, it's so important to communicate, because that's how you keep investors, and that's how you get referrals, and that's how you build a brand and a great name in commercial real estate. And people know, when they know Alliance and Ben Reinberg, they know we close. They know our words are good. They know we produce great deals. And your track record and reputation precedes yourself. And so that's what we're doing, and that's who we are. And it's not easy. It's not like I woke up and snapped my fingers and I get to this place where you and I are on a podcast together. I mean, I spent, a lot of dark, cold days in Chicago grinding, waiting for the sun to shine, traveling, going from O'Hare Airport and flying to, small parts of Georgia and Florida and Alabama and Texas and Arizona and New Mexico and Idaho and California and various parts of Illinois and Missouri and St. Louis and the East Coast, and you name it. And I would spend weeks away from my family, shoe leather and grinding, or driving regionally when it was more of a regional business. And so it's a lot of processes, and it's a process. It's not a journey. It's a process to get to a certain level. And if you don't honor it, you don't respect it, and you don't show up, and you're not consistent, you won't get there. Because commercial real estate is a tough business. There's no doubt. But you put the work in, you put the time in, and you got some gray hair like I do. You get those gray hairs as you grow. You realize, okay, I've done enough deals. I've had enough stress. I've seen enough people, enough resources. And that's what life is about. But don't, you look on social media, Lincoln, people snap their fingers and they're sprawned over a car, a Lambo, or they're faking that they have a private jet and all this crap you see out there. They don't know the process or the grind or the struggle that people go through to get to that point. Jeff Bezos just didn't build Amazon by snapping his fingers. He worked his butt off and took risk, just like Bill Gates and Warren Buffett, all these incredible, talented people, and Elon Musk, who's brilliant. You look at all these people, they work hard, they grind, they focus, they continue to grow as people. And that's why they're inspirational icons, because they have the full package, and they're willing to do things that people don't do, just like I'm willing to do. And so people are like, well, what's the secret to success? There it is, right there. Just look at those folks. Look at me, look at anyone else, and say, well, how do you become successful? Well, you better focus and grind, and you better be careful who you surround yourself to, because that will come in. So you have to really tighten up, and you have to really discipline yourself, and discipline is really important in life.
I think what you're saying is so good, in that you've got to value the clients that you're working for. You've got to really take care of the money that they're giving you. Like you're saying, they have saved this up. It's their, their retirement, their investment, whatever it is. You've got to value the client. And because of that, that drives you to do this hard work that you're talking about, to be disciplined, to enjoy the process, and to build something. And you've got to put your clients and the investors that you're working with first to make that happen, and to be worthwhile, and to attract others to come to your business and organization. If there are people that are interested in working with Alliance, or what those criteria are. Is there a place that they could look into that, or would you want to touch on anything there for people that are interested in Alliance?
Well, the best way to engage with us is go on our website, alliancecgc.com. You can log on if you're a passive, a credit investor. People always ask me, what's a credit investor? Well, a credit investor is you made $200,000 in earnings for the past 2 years, or your net worth is $1 million. That's typically, generally speaking, the rules for a credit investor. So if you're a credit investor, log on. Feel free to log on to Alliance Medical Property Fund. There's investor tabs. You can invest with us and reach out to us. We're happy to build wealth for you and your family. If you want to follow me personally, you can follow me on all social media platforms. Go to benreinberg.com and follow me and learn and grow. And we're producing great content. And then feel free to listen to my show, Ben Reinberg. I own it. It's celebrities and ultra high net worth individuals that come on our show that are success to significant. So it could be health, wealth, relationships, business, commercial real estate, sales, you name it. I mean, we've had incredible people. Today they launched Tony Horton, who's one of the top trainers in the world. He's outstanding. He's launching a program tomorrow. So we launched him today. And it's just great content, great education, real authentic, where people can open up on our show and really show you that, you look up to these people and you follow them on social media, but they're just human beings like you and me, and you could do it. You could do anything. And so we want to inspire people to create success for themselves and to do it the right way and become a great part of society. And, we live in the best country in the world, in the United States. And so if we can help people in our country grow as men and women and create an impact, well, that's a wonderful thing to leave a legacy about.
Absolutely is. And I wanted to ask you one question here before we wrap things up that we ask each guest, and that is, what is one character trait that you notice successful people commonly share?
I would say being humble. Real successful people are humble. They've been there, done that. They don't need to prove themselves. They have the confidence. They love themselves. And so that's one. The other one I could help, I'll give you a bonus, is consistency. And being consistent is huge. And consistency wraps around focus and being persistent and all these other things. But being consistent and showing up every day, even when you're tired or you're not feeling well. I'm even coming off an illness. I worked from home yesterday, which was very rare. My staff was like, what's going on with him? Because that doesn't really happen too often. But I did. I wasn't feeling up. However, I was working from home. I was grinding. I was still pushing forward. I just didn't want to get anyone sick. And so at the end of the day, now I'm back in the office and I'm hustling, doing the same thing. It's just consistency, showing up. And when you have that consistency, everyone around you knows, your family and friends, and they're like, he's doing his thing. We know what he's doing. He's consistent. His behavior is, he's at Alliance. He's in the West Coast office. He's hustling, So that's who I am, and that's where success is created, with consistency.
That's good. That's good. Humility and consistency, absolutely key. Well, Ben, I appreciate your time and coming on the podcast. Some really good conversation and insight there into your story, and I know a lot of people will be able to take some things here and utilize it, and whether it's commercial real estate or just other businesses. So thank you for your time. Yes. Well, definitely check out Ben on all of his different platforms and his podcast, I Own It. Appreciate you guys listening in. If you found value from this podcast like I did, please leave us a 5-star rating and review, and we will catch you on the next one. Thanks.